So firms like BlackRock pushing Bitcoin as a part of portfolios, a certain percentage as a hedge for or better diversification. At some point, this mantra gets like absorbed by the wealth advisors, etc., and it becomes normal. And once that happens, these firms will also do more and more size. There will be more structured products. There will be more wealth desk executing, etc., etc. And of course, that paves the way for way more derivatives exposure. For us, coming from years ago where the exposure was this, and we were already like looking at peak volumes, which are really impressive. I think a few years from now, if we look back at today, it will be
Many multiples.
bigger. Yeah,
Yeah,
and it's difficult to quantify, but if you look at like developed markets, the US, multiple markets in Asia, India, etc. If you look at the size of the spot market, the futures market, etc., versus the rest of the overall trading equities, etc., there's a ratio, and these ratios differ greatly between countries. But if you look at crypto, it's tiny. So even though we are impressed, and when I mentioned $40 billion of open interest, it is size, but it's nothing compared to what can be done if markets evolve more mature.
Yeah. So take, for example, Tesla stock or MicroStrategy stock or any individual equity that has options offered on it. Like, how large is the Bitcoin option market versus spot Bitcoin versus like your average very popular equity versus the options activity on that specific stock?
In the US, options would be bigger than spot. So spot trades, what is it, 2 trillion a month, and the options is like I mentioned before. We trade, let's say in our best month, we trade 100 billion or so. It's still
about a tenth. Yeah.
Yeah, but still, so it can be in our best month, the ratio spot will also be much higher.